Welcome back to the channel. If you looked at your portfolio today and saw a sea of red, particularly in the tech sector, you aren't alone. Today is February 4th, 2026. The last 24 hours have been a whirlwind of AI-driven panic, trade deal breakthroughs, and a massive shift in how the world views big tech. Let's break down the numbers and the narratives moving your money. Section 1. The US market, the Anthropic Shockwave. The Nasdaq just faced its toughest day of the year. Why? Because the software as a service model is under siege. Before we get into the why, let's look at the what. Wall Street saw a significant divergence today. Nasdaq Composite closed down 1.43%, while the S&P 500 slipped 0.84%. The Dow Jones showed more resilience, down only 0.34%, supported by a rotation into old economy stocks like banks and energy. The big story in the US is Anthropic. The AI startup released a new application layer tool that sent shockwaves through the software industry. For years, we've wondered when AI would move from cool chatbot to job killer for software companies. That day arrived. Investors are terrified of price erosion. We saw Nvidia and Microsoft both tumble nearly 3%. But the real pain was in hardware suppliers. Broadcom plummeted over 6% and Micron fell 4%. The silver lining, Palantir jumped 6% on a massive earnings beat. Walmart also hit a historic $1 trillion market cap as investors flee to safety. Section 2. The Indian market. India is caught in a tug-of-war. A massive trade deal with the US versus a tech bloodbath flowing from Silicon Valley. The Indian markets opened with a heavy heart. The Nifty 50 is hovering around 25,718, while the Sensex is struggling for direction at 83,645. The most significant event is a signature. President Donald Trump announced a formal trade deal with India. This is Liberation Day for trade. India has officially agreed to stop purchasing Russian oil. In exchange, the US has slashed the reciprocal tariff from 25% down to 18%. Despite the win, the Nifty IT index tanked nearly 6%. Giants like Infosys and TCS are reeling as US clients worry about AI disruption. Bajaj Finance reported a 6% dip in profit. Meanwhile, Adani Enterprises surprisingly jumped 10%. All eyes are now on the RBI meeting on February 6th. Section 3. Global markets and crypto. While tech burns, gold shines, and crypto prepares for a quantum leap. Let's look at the global snapshot. Asia was mixed. The Nikkei fell tracking US tech. In Europe, UBS announced a massive £3 billion share buyback, showing stability amidst growth drags. Gold and silver are the big winners. Gold surged 2.4% as a safe haven. Meanwhile, crude oil is sitting at $62.20. Pressured by geopolitical shifts. Geopolitical tensions cooled slightly after a new NATO framework was presented, but the threat of 100% tariffs on China remains a sword of Damocles. The crypto report, Bitcoin is at $78,100. A new quantum mining stack was released, potentially decentralizing Bitcoin mining even further. By the end of 2026, stablecoins like USDC will move from trading tools to core payment infrastructure for B2B global flows. The theme of the day is adaptation. The old rules are being rewritten. If you're an investor, safety is currently in value in real assets like gold and energy.